Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for the Precious Metals and Critical Minerals Conference. Our next presentation is from Yellowcake. Please note you may submit questions for the presenter throughout the presentation. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Andre Liebenberg. He's the Chief Executive Officer of Yellowcake PLC, which trades on the OTCQX Best Market under the symbol YLLXF and on the LSE under the symbol YCA. Welcome back, Andre.
Well, thank you, John. It's great to be here again and participate in the OTC events. As John said, my name's Andre Liebenberg. I'm the CEO of Yellowcake. Yellowcake was set up to provide investors with pure exposure to the uranium commodity. So we don't have any mining operations, projects, or exploration activities. We're a long-term buy and hold entity. Yellowcake IPO'd in 2018. We raised $200 million and purchased 8 million pounds of uranium from Kazatomprom. Kazatomprom being the world's largest and lowest cost producer of uranium. The contract that we put in place back in 2018 included a 9-year option arrangement, so we can purchase up to $100 million of uranium per annum from Kazatomprom at the spot price through to the end of 2027. And that option arrangement allows us to do all of it or none of it, multiple tranches completely at our option. And as I mentioned, it is essentially at the spot price because it's the average of the two weekly prices from the price reporters being UXC and TradeTech. Since 2018, we've accumulated 21.7 million pounds of uranium. In September, we did an equity raise, and that was well supported by investors. And we entered into an agreement with Kazatomprom to exercise our option for 2025, and that included the purchase of 1.3 million pounds of uranium, which we'll get in the first half of next year. So that will take our total volume up to 23 million pounds of uranium. Our balance sheet is essentially the 21.7, or on a pro forma basis, 23 million pounds of uranium, plus around $70 million of cash. So that's it. There's nothing else. We don't have any debt or hedges in our balance sheet. Our inventory is held in Canada and France, at the Orano facility in France and at the Cameco facility in Canada. There are only 3 facilities in the West where you can store uranium, the third being in the US. We don't store any uranium in the US, just in France and Canada. And we have a low-cost outsourced business model. We only have 2 full-time employees, being myself and Carol Whittle, our CFO. We both work from home, and we've outsourced our transactional activities in the uranium space, as well as our accounting and IT. So it's a very low-cost structure, and we target a cost base of below 1% of net asset value, and we've achieved that since IPO. Now moving on to the uranium market. Nuclear is now being seen as a critical asset. It's more than just a clean energy option. It's now being seen as providing energy security, supporting industrial growth, as well as achieving climate goals. And the underpin of the sort of growth in nuclear is uranium as the fuel. And I just want to talk about the demand and supply side factors in this market, because that ultimately underpins the performance of Yellowcake, because it relates to the uranium commodity. On the demand side, we have 4 key issues or support factors. The first is the energy transition carbon neutrality theme, which has been around for some time now. We saw post 2019, 2020, a number of countries enter into commitments around carbon neutrality 2040, 2050, 2060, and that is continued to grow since then. we've seen a rapid growth in the uranium or the nuclear reactor fleet, principally out of Asia, driven by China, India, and as well as the Middle East. And that growth is fairly significant. There's something like 65 reactors currently under construction. When Russia invaded the Ukraine, energy security and energy independence became a major theme. Europe was reliant on gas and coal out of Russia, and the sanctions that were imposed put pressure on those commodities, and it also created the need for energy security and energy independence. And more recently, we've seen the advent of data centers and hyperscalers, and a lot of talk around SMRs as small modular reactors supporting the energy needs of these data centers and hyperscalers. So on the demand side, we've got four factors really acting as tailwinds for demand. We've seen demand forecasts increase from around 1% at the time of our IPO to, probably somewhere between 3 and 5%, depending on who you look at, per annum today. However, on the supply side, we are seeing a very constrained supply side. Ever since the demand that was knocked out of the market post Fukushima, there was very little investment put into the uranium fuel cycle, being uranium exploration and development of uranium projects. So we had about 10 years plus of very little investment going into that space. And then really post-COVID, we've seen CapEx inflation being quite significant. We've seen supply chain issues emerge. And also, we've seen a depleted skilled workforce in the space. So, the folk that could build uranium mines and do uranium exploration, a lot of them exited the industry. Permitting in this industry takes a long time. It takes a long time in mining in general, but in uranium, permitting is a lengthy process. We've seen a number of projects that were previously shut in when the price was particularly weak, restart, but a lot of those restarts have had challenges. So moving on to the sort of broader demand themes and supply side, I just quickly wanted to put the global uranium supply into context. There are essentially three countries that produce 75% of the world's uranium. Kazakhstan is around 40%, Canada is around 25%, and if you include Namibia, that's 75% of global supply. So a very concentrated supply side, and that has its own challenges in terms of geopolitics and vulnerabilities. Moving on to the demand side factors, we are starting to see or seeing the alignment of policy and finance, being both public finance and private finance, supporting the growth of nuclear. In Belgium, we've seen them reversing their legislation that called for the shutting down of all their nuclear plants. So that has been repealed. Denmark is now looking or re-looking at its nuclear policies and looking at repealing its legislation that called for a wind down of the nuclear fleet. South Korea, the same. In Japan, post Fukushima, all the nuclear reactors were shut in. We've seen a restart process that's accelerating. A number of reactors have now been restarted, and more are likely to restart in the near future. In the US, we've seen President Trump's executive orders really support a new, a renaissance for nuclear in the US. I mean, those executive orders, called for a quadrupling of nuclear between now and 2050. So that's taking 100 gigawatts of electricity equivalent to 400 gigawatts by 2050. It also supports advanced reactors. So that's the new technologies around small modular reactors. And there's a desire, to have 10 reactors under construction by the end of this decade. So very ambitious targets. Whether they all get met, who knows? But it certainly points to the direction of travel in terms of policy support for nuclear. And I mentioned, the confluence of policy and finance, public and private finance. And I think the recent announcement of the partnership between the US government, Cameco and Westinghouse to put together $80 billion to support the deployment of nuclear power. I mean, that's an incredibly large number and very positive for nuclear in the US. I mentioned China earlier as a key driver of growth. Just to some numbers around what China has achieved. If you look back to 2007, China has added 49 reactors, where the rest of the world has added 48. So China's added more reactors than the rest of the world together since 2007. China are approving 8 to 10 reactors a year. They're building these reactors in a 5 to 6 year time frame at around $10 billion per reactor. And this didn't sort of come out of nowhere. They've spent the last 10 years building out their supply chain, from the foundries to the welders that can weld to nuclear specifications. That whole supply chain has been built out over a 10-year time frame to the point now where they can, if they want to build reactors, they've got a supply chain that's set up and distributed to pull all of those pieces together to deliver the equipment to site for assembly on site. And that's significant. So out of the 65 reactors that are currently being built, China are building 35 of those. But it's not just about China. India have got a plan to build, 10 plus reactors. We've seen 4 reactors recently commissioned in the UAE. The Saudis are looking at a reactor program. Reactors will be built in Turkey, in Egypt, and other places in Europe. So, whilst China is the sort of key driver of growth, there are a lot of other places in Asia and in the Middle East that are supporting nuclear growth. The industrial users are now sort of becoming investors. The industrial users aren't waiting around for governments and utilities to build out their requirements. These data center and hyperscalers, electricity is an input for them. It's not an output, but it's an essential input. And so we are seeing increasingly, the big hyperscalers investing in nuclear and in the supply side of electricity. We're seeing 20-year contracts supporting the restart of shuttered nuclear plants like 3 Mile Island 1, Duane Arnold, Palisades. We're also seeing huge support for small modular reactors from the hyperscalers. Bill Gates has got his technology, Sam Altman's Ockler technology, and they're being supported in an amazing way to push forward the development, because nuclear is the perfect fuel for data centers. It provides 24/7 low carbon, sustainable and predictable power. And you can build a small modular reactor next to a data center and plug it straight into the data center without the need to couple to unreliable grids where you face grid stability issues. So, we are seeing nuclear becoming the digital fuel for the hyperscalers and data centers. And just to put some numbers around the growth, I think the forecast I've seen is that data center energy requirement growth over the next 3 years will equate to what Japan as a country consumes in electricity today. So these are hugely significant numbers. And, I mentioned the confluence of policy and funding, and we're seeing now, private funding and public funding becoming increasingly available to support nuclear. The World Bank has ended its funding ban on nuclear energy. 2 years ago, 14 major banks supported the tripling of nuclear, the likes of Goldman Sachs, JP Morgan, major global banks supporting the tripling of nuclear power. The Asia Development Bank is really looking at its support for nuclear. And you know, the Asia Development Bank is interesting because Asia is still largely dependent on coal as a fuel source for electricity. We're seeing the entry of private equity into the funding space. You know, taking two examples here in the UK, Hinkley Point and Sizewell C, both have private equity and private finance, you know, collaborating with public finance to support the funding of those projects. So all in all, you know, more availability of funding reduces funding costs, and this should accelerate nuclear projects. But, you know, again, as I mentioned at the beginning, against this sort of ever-increasing optimism around demand, supply is the issue. So for us, you know, being a holder of physical uranium, it's about supply and demand. And we do see a challenged supply side. If you look at the underinvestment that I mentioned earlier, you've got the existing production base running as hard as it can. You know, both Kazatomprom and Cameco are running at full tilt, and both have you know, pointed to issues you know, on the production side, because it's hard to run these facilities at 100% all the time. You know, the mining side is vulnerable to weather events, to labor events. So, you know, we are seeing a very, very stretched supply side. Looking at the WNA forecast that came out in September of this year, they're talking about demand needs for uranium ranging between their mid case of 280 million pounds up to, you know, 530 million pounds. And if you think about the supply side today, producing around 160 million pounds of uranium, you've got to take 160 million pounds of uranium to 280 million or 500 million by 2040. That's 16 years, you know, 15, 16 years away. And in the uranium space, the average construction time or development time from a resource discovered to a mine producing is about 16 years. So therein lies the challenge. So, you know, I do believe that this industry and the uranium price in the sort of short to medium term are going to be very much impacted by supply, much, you know, rather than demand, because we are seeing a robust demand cycle. Again, just looking at the development of mines and projects, if you take out the Kazakh projects over the last few years, the last mine to be constructed was in 2017, which is the Husab mine in Namibia, constructed by the Chinese. So we're talking 8 years ago since we saw the last greenfield mine brought into operation. When we IPO'd back in 2018, all of the greenfield projects that were on the drawing board back then are still on the drawing board. None of those projects have started construction. So, you know, and this industry, it takes a long time to bring this capacity online. You don't flick a switch and have the volume tomorrow. Geopolitics plays a big role in nuclear, and this was, you know, very evident after the Russian invasion of Ukraine. Russia produces about 5% of the world's uranium, but it has 35% of the world's conversion capacity and over 40% of the world's enrichment capacity. So if you look at the nuclear fuel that flows into the US today, it's around 20% that comes from Russia, and in Europe, it's a bigger number. So even today, despite all the sanctions, we're still seeing Russian fuel flowing into the US and into Europe. Now, the US has put in place a complete ban of Russian fuel from the 1st of January 2028. And that's going to put a lot of pressure on Western converters and enrichers to expand capacity. You know, the technology is available. It's known, and there are Western converters and producers like Cameco, Orano, Urenco, who can expand their facilities. But it really requires the consumers of the fuel to put in place contracts that are of sufficient duration and sufficient price to incentivize the technology providers and the providers of this nuclear fuel to invest and increase their capacity. Now, we have seen capacity increase announcements on the enrichment side, but yet to see anything on the conversion side. This issue will get solved in time. As I said, the technology is available. It's really about, who's going to pay for the development and growth of this capacity. And then just moving on quickly to the spot versus term market. Now, the spot market is the market that's very visible. You see a spot price on Bloomberg. The price reporters, UXC and Trade Tech, report prices every day. But the spot market is not the real market. Utilities purchase about 85% of their uranium needs in the long-term market. So we've seen a lot of volatility in the spot market. The price has gone from 107 down to 62, back up to 82, now sitting at 75. But the term price has gone steadily from the beginning of last year at 68 odd to where it sits now between $84 and $86 a pound. So even when we saw a big drop in the spot market price, the term price didn't move. So that tells you that there's not a huge amount of supply at those sorts of prices. And why are we seeing a much tighter and more volatile spot market right now? If you go back, to the 1950s, where commercial reactor programs got underway, between 1950 and 1990, essentially the supply side produced more than the demand side can consume. So we had a big buildup of inventories. That crossover point in 1990, it took all the way to 2023 before those excess inventories were soaked up. And that's why we had a lot of pressure on the spot price as well. So now we have a situation where there's very little excess inventory available, and the volumes in the spot market have come down significantly, and the sizes of transactions, in the past where you could do £1 million or £500,000 trade in the spot market, typical lot sizes are now between £50,000 and £100,000. So that's just quickly an overview of the spot and term market, and I would suggest that looking at the term market is much more meaningful and important for where this industry is growing. And just to summarize, uranium does sit at the sort of confluence of sustainability, industrial growth, and energy security. We've got some very interesting and exciting demand side factors pushing, nuclear growth rapidly. And against that, we've got a very challenged supply side. And, with the 23 million pounds on a pro forma basis that Yellowcake owns today, we think we are very well positioned to benefit from a rising uranium price. Thank you very much. I've just had a few questions that have popped up from the audience, so probably just address a couple of those. One question relates to small modular reactors and what our view is on the technology. I think that technology has advanced significantly over the last 18 months. We've got something like 75 odd designs being worked on, and it includes country programs, national programs, US, Canada, China, and it includes, large companies, GE, Hitachi, Rolls-Royce, all positioning themselves in that space. So I firmly believe small modular reactors are going to become a reality. The Chinese have developed their first commercial small modular reactor, which they're cold testing at the moment. That will be loaded with fuel, and it will be operational by next year. And if the Chinese can build one of those, they'll build many of those. Rolls-Royce here in the UK have got a small modular reactor program that I think will be active by the end of this decade. In Canada, Darlington have already given a construction license for their first GE Renova small modular reactor. So I really believe that technology will be a reality. And it can play multiple roles. Nuclear is very well suited to desalination. So if you have small modular reactors, you can put them in banks where one can produce green hydrogen, other can support district heating, desalination, and electricity. It's the footprint of these reactors is very small, and in countries that have got very big land masses and small populations, it helps avoid the stringing of interconnectors across vast spaces at great costs. So I'm very excited about small modular reactors. The other question that comes, and I guess it's pertinent to some of the news that we're seeing over the past few days, if there's a peace deal in the Ukraine, what does that mean for Russian fuel supply? It's very hard to know what happens there. Will there be a peace deal or not? But I think the one thing that is probably safe to say is that the customers, will in the future make sure they're not as reliant on Russian fuel as they have been in the past. More as a risk mitigation strategy than any political comment. I just think that the quantum of fuel that flowed into Europe and the US. So whatever happens, I find it hard to see that will continue or go back to where it was sometime in the future. That's all. Thank you very much. I can be contacted by email on andre.liebenberg@yellowcakeplc.com. So please feel free to reach out. Thank you very much.